The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we started Monday's trade relatively quiet and mixed, but we ended the day with a fair amount of green on the screen throughout the grains and oilseeds, soybeans, a nice moderate day higher, along with KC and spring wheat. Corn and Chicago wheat also up a little bit on the day as well. Mixed action in the protein sector. Let's talk about the market trade as we kick off a new week. Joining us now, John Heimberg with Total Farm Marketing. John, good to talk with you, sir. Hope you had a great weekend. I know both of us were very happy by the showing for the Green Bay Packers on Sunday. And, I'm just happy in general that you got NFL back, college back, high school back. It's football season. That's something to be happy about, right, John?
Yeah, very much so. It's kind of, we got this cool weather that came through, maybe a little bit of frost out there. We'll see on that, how that plays out down the road, but kind of just felt like fall was in the air this weekend, getting to watch both college as well as high school and pro football this weekend. So, and as that Pack showed well, which was a little surprising, but I'll take it, even though it's only the first game of the season.
Yeah, only the first game, but looking good. Maybe that Micah Parsons trade will do them well. And, in the spirit of the Green Bay Packers with green, we got green on the screen on Monday's grain trade. And you alluded to it. Frost over the weekend in the northern plains and the upper Midwest. I wonder if that played a role in some mid-session buying, or we look at the longer-term forecast, getting a little bit hot, getting a little bit dry here for September. So maybe all of that together factoring in. What's your thoughts on Monday's higher closing grains, John?
To me, I think it's a combination of a couple things going on here. Maybe not so much the cold weather. I mean, obviously we'll see down the road if there is some impact on there. But if that would have been an impact, we would have saw it last night in the terms of the trade. And it was pretty quiet on the overnight session. But again, I think those former forecasts going into mid-September, kind of keeping this August pattern going, that we've been seeing, and now maybe expanding it a little bit more west in terms of where we're going to see the dry weather, I think just makes the market a little bit anxious, especially that soybean market that, we're at that window. We need to get some moisture to really get this yield to finish out where this market is anticipating it, and that's not happening in most areas. So we're going to expect to see some of that yield come down, probably for both corn and soybeans. Not sure if it's going to happen on the report this week. We just got to be cautious of that, just given the process the USDA goes through. But I think that's what brought some of that afternoon buying in today, or the late session buying in today, to lift both corn and soybean futures higher. Then throw in the fact that we saw some really good movement in the wheat market, that spring wheat, KC wheat contracts, double digits higher, putting a reversal in on the charts again today. Maybe we just got ourselves a little overdone here with the sell-off last week. There's not a lot of things pointing higher in the wheat market right now in terms of news, but I like the export inspection pace. We're off to a pretty good start, 10% over last year with current movement of those wheat bushels. So I think maybe that was a piece of this. Plus also too, just, where we are on the global scale of things, that U.S. wheat might be just need to find a little bit of export business here when we got to those new lows.
A lot of producers have been talking and very concerned about, look at basis levels, for instance, in parts of the Western Corn Belt and the Plains, particularly soybeans, $8 cash beans, or maybe no bid at all. So you've been hearing a lot of that, and, a lot of producers not sure what to do with their marketing. A lot of talk of storing grain, but thinking about that, there's options out here, John, especially when I look at quartered soybeans in particular, getting a nice little start to the week, but price levels on the board. I mean, there's tools in the toolbox. There's opportunity out here to manage your risk even amid this low price environment, right, John?
Yeah, very much so. And there's a lot of tough decisions producers are going to have to make going forward here. And that's actually, as much as I'm enjoying this rally, those kind of key points you just talked about in terms of the cash market, what's happening with basis. Obviously, we still got concerns on the export side of things for soybeans and that lack of Chinese business still coming into the marketplace. Those things that are going to probably weigh on both these markets, corn and soybeans, as we get into October and really get the combines rolling. And not that I want to compare year to year, but let's just kind of look at last year and this year. Last year too, we put our low in corn. Last year it was on the day before first notice day. This year it was off the USDA report. And we've rallied very nicely off of that 392 low here, now pushing the 320 level. Maybe we got another 10, 12, 15 cents in this here if the momentum wants to carry us up into that 930, 935 area. But then we got in the 1st October and we gave most of that back under harvest pressure with just the same buildup that we're just kind of concerned about. Transportation, doing bushels in the pipeline. We're watching the Mississippi River at Memphis getting dry again, and that could be something we'll start seeing some restrictions on the river, maybe in terms of barge traffic. Those things are all going to trickle back into that cash basis. So the futures market's doing one thing, but the cash market might be totally different. Now, kind of getting to your point as a producer, what do we do with these bushels that we have out there? Obviously, it's nice now. You got a little bit of a movement, at least in some of those unpriced bushels that you're maybe dealing with that you're going to have to find a home for this fall. I'm in a big camp here, especially these prices. If you're moving some bushels just because A, you need cash flow, or B, you just have to because you don't have the storage for it, look at your storage costs, look at buying options to picking up those call options. Biggest thing in the market right now, volatility is pretty flat. The news has been quiet. Strong update is 3 cents today. We're not getting big movements. So those calls out into the spring, we're buying a little carry, but they're still out there and they're available and they're not going to break the bank. And so that's been probably the biggest business I've been doing lately here is just guys have pulled the trigger, had to do it anyway, didn't want to pay the storage, need the cash up front a little more just to kind of cash flow the operation. Then we just go out, let's find ourselves a low risk, in other words, a fixed risk position, one-time cost, keep it cheap so we're not killing a already difficult sale, and just keep yourself in the game as we go into the spring and the first part of 2026.
And that's a great point you make. No one knows what's going to happen with the Trump administration's trade policy here moving forward, China in particular, but all the other countries as well. It's all an unknown. But for a producer to look at the board here and maybe there's some opportunity with some of these spreads. You think East July corn, for instance, or no July beans or whatever the case is. You mentioned it. Look out into the spring. There's some carry here. There's some opportunity with the spreads in quartered soybeans to manage your risk right now. It's a little more attractive, I guess, when you look out into the spring and summer months of 26 versus maybe that price you're seeing right now for East corn or no beans, John.
Yeah, there's some opportunities out there, but again, you got to be able to hold on to the storage side of it or have the facilities. And then on top of that too, though, let's just not be greedy out there. And if you think we got a market that's moving higher, we've got some value back in. I'm looking at 440 on the March today, or just under that, 450 out there, and on the May, July pushing the 455. Maybe I'll get up to 460 if we get a little more strength. Don't forget about those puts. Okay, if you're going to go ahead and hold those contracts or hold those bushels, or if you got a basis contract, you want to move it or along those lines, make sure we got some floor underneath that market, because again, we are still dealing with a large supply situation. We got a lot of geopolitical issues that could come up to play. This market very well could find ourselves a peak, and that is it. As we go into 2026, makes me a little cautious of the market longer term. Again, same type of thing. If you want to stay long the bushels, stay long the bushels, but reward the rally with some type of put action just to put a floor underneath there. I'd rather be watch a put go worthless and be long the bushels if the market does continue to rally higher. If the demand continues to stay strong. I think the biggest thing in everybody's mind is that this yield comes down from the 188 to 182. That's going to tighten up the balance sheets fairly quickly, especially given the demand factors on the export front. So, there's some reasons why, if you're making sales, keep yourself in the game, re-own it. If you're not going to make sales, you want to hold on to it, protect yourself at least here. And you got low it, keep them cheap, the minimum cost, minimum risk other than the purchase of that option, and leave your bushels open either for the upside or, again, calls open to the upside if you made sales.
Because, one other thing too, we got, of course, WASDE on Friday, but South America, we're going to start talking about spring planting very, very soon. And so that's going to start to play into this overall conversation as well, John.
Yes, it will. And as we start moving along here, we're going to be keeping a close eye on South American weather. In fact, we might even make that the shift of the market now. It might be the South American weather, so keep an eye on that. They're going to be starting to put beans in the ground here again for the new crop. Obviously, the expectations for their new crop, bean crop, are going to be massive. We're looking at additional acres. a crop that's could make last year's even seem small if things come together in terms of good weather again. So those are things that are going to be out there in this marketplace that is going to start probably very quickly shifting to the headlines after we kind of get into the point where, all right, where we are, we're harvesting. What's happening 6 months from now or 8 months from now with that South American weather and how the planting pace goes down there.
John Heimberg with Total Farm Marketing's our guest analyst here today on Market Talk. Let's go over to the protein sector. John, cattle, kind of a mixed day futures-wise on Monday. And, obviously August was such a big month for cattle. But really since Labor Day, I felt like this cattle futures market has started to chop around a bit. I mean, what are you seeing here in cattle as we start a new week? Are you getting the same feeling? What are you watching right now?
Well, we put our first negative week on the October contract and basically in 7 weeks now. So that's something that kind of tells you maybe that upward momentum's kind of paused here. Now I'm cautious with that. Now, first off, the October contract usually kind of walks back after August expires on the historical level or the seasonal window to about this September 8th, 9th, 10th window, and then starts finding some footing as we move into expiration. Cash trade was kind of sloppy this week. Some areas are higher, some areas were lower. Overall, let's kind of call it steady to maybe a touch higher based on the area. And that's still trading, $6-7 over that October contract. So I'm a little cautious that, we're getting a little pushback here. We're going to back test a little near-term support. Got real close to that today with that 230, pushing down to 235. I had support around 233, so maybe we see a little bit more weakness. And then if we stay strong in that retail market, choice carcasses slightly higher today, nice move in select carcass today, and that cash market can stay firm, I would be shocked that we see one more good push in this. The interesting side of it continues to be the managed money. I know now they're kind of maybe with the flow of the market as we were softer over the last week or so here, but funds have really kind of peeled back off their long position. They're sitting about 110, 115,000 long contracts. They're at 156,000 in that record long back in April. And since then, we've only rallied $30 while the funds have gone sideways to softer in terms of their net long. So to me, it feels like if the market gives us the right reason, they got some ammunition. If they want to make another run at it, they could here. Obviously, the biggest thing is going to still be the demand in those retail prices. We'll have to continue to watch that going forward. And obviously, what's going on in that feeder cattle market, again, for those replacement costs, if they stay high, that's going to keep this cattle market supported. So at least I'm not seeing anything here other than maybe a technical break to get us to wash out, because the fundamentals, at least at this time frame, are still in favor of high cattle prices. But obviously, sometimes money flow can be a bigger trigger than the fundamentals. So that's something obviously staying cautious with. Continuing to use put strategies just to keep that top side open, but make sure we got some type of floor.
Yeah, and some of that retail demand post-Labor Day, going to be interesting to watch. Boxed beef choice was up 82 at midday Monday. Select was up 228 at midday Monday. Be watching that closely. How about in the hogs? Kind of choppy there on Monday. Maybe some profit taking, John. What's your feeling in this hog complex right now?
We've seen a nice move out in the front months, October, December. So maybe we saw a little bit of bear spreading today, a little bit of profit taking there, but there's still some things pointing higher, like in that hog market. We got new contract highs in December's last week, just kind of consolidated right at the top of that chart today. Same thing with that October contract a little bit here. Biggest thing I'm watching, look at that index, 105, pretty quiet today. Cash trade has come down in terms of the direct cash side, but there's still some areas here that this market can find a little bit of seasonal strength and maybe get one more good push in it on that December and that October contract. So, but today felt like a profit-taking day, with the bear spreading, selling those 2 months versus the back end. But overall today was pretty much a consolidation day. Do like that uptrend, though, that's still in this hog market here for, like I said, maybe one more possible run. And then we want to move ourselves into more of a defensive strategy as we get further ahead.
Any thoughts over in the dairy complex? You and I haven't touched on that in a couple of weeks here. I know at the end of August, butter prices took a big hit as we get into the fall months. And, we mentioned football season and school back in session and more. You typically see a decent demand for dairy products. What's your feeling right now across the dairy complex as a whole, John?
Yeah, I was going to touch on that a little bit when we were first talking football there in the pizza season. And we've seen obviously the jump, and there's some indexes that track pizza usage and pizza orders out there. And they've obviously taken off here with the big time move of college football back, as well as now the NFL. So with that hopefully can get some footing into that dairy market. It's been rough, and it's all tied on to basically two things: the increase in cows, the increase in production. We're seeing that both in the United States as well as globally, that there's just a lot of milk in the pipeline right now, and that's just what's been weighing on these product prices, is just the availability that's out there. So again, tough week last week, new lows in that contract. Did at least find some footing today as cheese prices were just a touch higher, at least steady today. But I'm a little fearful that this could continue to build here. So we'll have to watch. Starting to feel, though, like maybe we got a window where we can get some footing, get some bounce in this market, especially if we see some decent demand, especially as we move maybe more into the fall type season and kind of get past maybe this production bump. But the biggest thing is that, producers stepped up, brought more cows in. Production's up 3.5% for both July and June. That's just a lot of fluid milk into the system, and the market's got to work through that right now. Hopefully, though, we're finding some lows here.
John, any other final thoughts you would have, folks, or anything you would reiterate on the show today?
As we get towards the end of the week, obviously the focus is going to really shift to that USDA report, and everybody's going to be focusing on yields and everything along those lines. So remember, there's a process that goes on here now with the USDA, what number they put out there. I mean, last year the drying conditions were tougher, finishing this crop out. It was more Corn Belt wide. And the USDA raised that yield from up 0.5 bushel per acre from August to September. Not saying they're going to do that this week in terms of that report Friday, but it might be one of those things that maybe just kind of a slower play. So be careful of that. Obviously, the market's going to react to it very quickly, but then I think the traders are going to sit back and say, yeah, okay, you left yield high, but at the same time, we know what it's really going to be, and they'll trade what their number is, which right now I'm thinking market's probably in the low 180s for that corn yield versus the 88 number. Or we saw SP Global's 189 number on Friday, which I think put a little pressure on that market at the end of the week last week. So again, remember, it's a process. It's going to take some time to work through here, but just take advantage of rallies when you can and somehow protect value, just given the fact that we still have a heavy supply market coming at us with harvest right around the corner for both corn and soybeans.
John, if folks want to reach out and have a conversation with you at Total Farm Marketing, what's the best way?
Love to chat with them. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget the website, totalfarmmarketing.com.
John Heinberg, Total Farm Marketing. Always good to hear from you, sir. Have a great week, and we'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.